Hi, good evening, everybody, and welcome to this meeting of the Pensions Committee and Board. I'm Councillor George Dunstall, and I'll be chairing this meeting. And can I please ask committee members and officers to introduce themselves? Staff.
Heidi Scott, Principal Committee Coordinator.
Fiona Alderman, Assistant Director of Legal and Governance.
Nick DaCosta, Member for Highgate Ward.
Randy Plowright for Unison.
Craig Patterson, Employer Representative.
Representative.
Matt White, Councillor for Tottenham Central.
John Bevan, Councillor, Northumberland Park.
Jamie Abbott, Pensions Manager.
Tara Neves, Director of Finance.
Great, thank you. And we'll let those that are online introduce themselves as and when they speak. That's all right. Just to remind everybody to please switch off mobile phones or put them on to silent. And we'll move on to item 1, filming at meetings. This meeting is being live streamed via the council's website and will also be recorded and available to view by members of the public. Thank you. Moving on to item 2, apologies for absence or lateness or substitutions. I've had apologies from John Raisin, Keith Brown and Councillor Hymas. Anyone else? Nope. Okay, they'll be noted. Moving on to item 3, items of urgent business. We've got no items of urgent business. Moving on to item 4, declarations of interest. Any declarations of interest? No. Please let us know if you become aware of any during the meeting. Moving on to item 5, deputations, petitions and questions. And there are no deputations, petitions or questions this evening. Moving on to item 6 is a record of training undertaken since the last meeting. Is there any training that anyone would like to report? Nope. Fantastic. Moving on to item 7, minutes of the previous meeting which have been circulated. Does anybody have any comments regarding the accuracy of the minutes? Nope. So we can agree the minutes of 2nd of December. Item 8 is the Pension Fund Accounts External Auditors Annual Report. And I'll hand over to Jamie Abbott, Pensions Manager, to introduce this. And then we'll invite some questions and comments from the committee. So, Jamie.
Thank you, Chair. Good evening, everyone. So item number 1 is the Pension 2023-24 Pension Fund Annual Accounts External Audit Annual Report. So this is the IAS 260 report and the Pension Fund Accounts for 23-24. So we're asking the PCB to consider the contents of the report and any further oral updates given at a meeting by the KPMG representatives. To note the statement of accounts for 23-24. They were presented to the Audit Committee on the 27th of January 2025. To note the draft IAS 260 report, and then we ask the PCB to agree that the committee delegates a sign-off for the pension fund accounts of 23-24, subject to any final change required by the conclusion of the audit to the Section 151 officer in consultation with the chair. So we do have KPMG on the call who will present the IAS 260 report, and I'll hand over to them if that's okay. Thank you.
Thank you. Thank you, Jimmy. Good evening, members. Can you hear me?
So I should say the IAS 260 report is from page 31 in the reports pack.
Right. Can you hear me? Good evening, members.
It's very, very quiet. Yeah. So can you try speaking again?
Sure thing. Can you hear me?
Should we try? We'll try that. That was a bit better.
Right. Thank you. Good evening, members. Is my voice now clear, or can I start my session?
That's okay. Just, yeah, try and speak a bit slowly because it's a bit echoey as well now.
Sure thing. Sure thing. Right. I'm Mehul Agarwal, Senior Manager at KPMG and Lead Engagement Manager on the audit of Haringey Pension Fund for year end 31st March 24. Alongside me, Mohammed and Tom Bradbury are also in the meeting who have worked on current year audit. I want to first of all thank the officers at Haringey Pension Fund for their cooperation during the audit, for providing us relevant information to conclude on the significant areas of audit. Our ISA 260 draft report is from page 31 in the agenda, and I'll quickly go through the key findings from the report. We plan to submit our final report in next few days, just before the backstop date. Page 32, we have remarked that we will issue a qualified opinion. I want to provide a further update that our qualification will be on prior year comparatives and current year pension fund account statement, i.e. the income statement, due to not obtaining sufficient appropriate evidence for purposes of audit in relation to prior year comparatives. Page 34 of our report summarizes our key finding from significant risk areas and key accounting estimate. We have also summarized outstanding matters as at today. I want to first inform that the matters that remembers that substantial work over journals and opening balance, which was an outstanding point when we submitted this report, has now been completed. On journals, we have noted a control deficiency, which is further in the report. I can discuss that later. On the opening balances, a discrepancy was noted when comparing the independent NAVs obtained from fund managers for year end 31st March 2023. However, this was not material. Having said this, members, we are going to issue a qualified opinion due to the comparatives because we haven't been able to obtain sufficient appropriate evidence, specifically with regards to valuation, and not able to perform any file reviews for the predecessor auditors who have issued a disclaimer of opinion on the prior year accounts. There has been no change in our risk identification and assessment as mentioned on page 35. At planning, we identified a significant risk on management override of control, which is covered on pages 36 and 37. After this report was submitted, we have been able to complete our procedures around completeness of journals population and assessment of high-risk journals. No issues were noted in respect of both. We have also not identified any suspected or alleged incident of management override. We have, however, raised a control deficiency related to segregation of duties when posting journals below 40K to the ledger account. I can discuss this further when we discuss the control deficiencies. Investment completeness, existence, accuracy, and valuation was identified as other audit risk, which are covered from pages 38 to 42 in our report. We obtained confirmations directly from fund managers and custodians. No issues were noted apart from an immaterial error of 1 million, which is disclosed on page 52. Officers have confirmed that given the immaterial nature of the finding, these will remain uncorrected. However, as these were more than the audit misstatement posting threshold that we communicated earlier in our plan, we have to raise this as an uncorrected audit misstatement. For testing valuations of level 1 and level 2 investments, we engaged our internal valuation specialists and do not note any deviations outside the range. For testing valuation of level 3 investments, we assess the reliability of unaudited NAV statements by comparing audited and unaudited results that were provided by the fund managers directly. No issues were noted at the time of testing, and we have been able to conclude over the valuation of investments at year end. For completeness, existence, and accuracy of cash balances, we did obtain direct bank confirmations, and no issues were noted on those bank confirmations as well. Other audit risk that are in the report relates to completeness, existence, and accuracy of contributions into the fund. These are on pages 43 and 44. Test of details and analytical procedures were performed on these balances, and we have not noted any issues on these balances for the year-end purposes. We also tested the disclosure of actuarial position of the fund in financial statements by assistance of our own actuarial specialists. The findings are covered on pages 45 and 46. The key assumptions applied for calculation of actuarial position are noted to be within our central and reasonable ranges. We do not note any issues with competence, capability, and objectivity of funds actuary. Members, page 47 of the report, we have provided summary of fees. Please note this will be further updated in our final report. At the time of audit, we noted changes in accounting officers, as a result of which there was delay in provision of information for journals audit. Further, additional procedures were performed to build back assurance from prior year disclaimers. Our final report will include additional fees that we have agreed with officers in regard to these matters. Moving forward, page 54 of report, we have summarized our control findings, which mainly relates to related party, journals testing, and investments. I want to confirm that none of them were considered fundamental for purposes of audit. However, I think officers have provided us the relevant actions or the relevant procedures that they are going to implement in next year to avoid those control deficiencies. Overall, these control deficiencies had no impact on the audit work that we performed. Members, I now request for any questions based on our report, and myself, Mohammed, and Tom are happy to take any such questions.
Thank you. Excuse me. Thank you very much. And thank you very much for the report, and also well done to the team at Haringey, because it was broadly a very good report, which is fantastic. I want to just throw it out now to questions, queries, comments from members. So John first, and then Craig.
I've got 4 questions, but I'm not sure whether they're relevant to the auditor or officers, so I'll say them anyway. It says here that the primary employer contribution was 17.5%. I don't know if you can clarify that, because I thought the council was paying much more than that. And I'm looking at papers that I had, because these papers come out twice and some of the page numbers are different. So on my thing, it was page 6. And then on page 9, additional voluntary contributions. My understanding is there's only about 5 people paying additional voluntary contributions. It's a very small number. Do we legally have to provide that facility, or is it something we should discontinue? And then on page 11, well, on page 10, first of all, there's a sum there, deficit recovery contribution, £9,644,000. Well, as the fund is in surplus, I don't understand why we seem, unless I've read it wrong, that we're paying in that sum to make up a non-existent deficit. And then the last point, well, this is a general point, I've raised it before, about when the fund's annual report goes out, all the management expenses, including our admin expenses, are all together in one section of that report. So I'm just raising that issue again to ensure that we can make sure that happens.
Thank you. So the point about the 17.5% on the page 10 of the report is a fair point to make. The rate is 23%. So that needs to be reviewed.
Can you speak?
Oh, sorry, apologies. Yeah, so the good point on the 17.5%, that needs to be reviewed, and I'll pick that up outside an update before the final accounts go to the chair and the section 151 officer. What is the other one? Sorry.
The AVC, is that a legal requirement for us to provide?
Oh, so yes. So actually, we have about 30 or 40 members who contribute to the ABC. I'm not 100% if it's a legal requirement, but it's something that the members, it's good for the members to have an additional option to pay into. So we probably will continue to offer that to the members. But again, I'll go away and check the legal stance on the ABC scheme to make sure.
And in terms of the, I can recall you making the comment about the splitting out of the expenses for the annual report. So we'll pick that up before the annual report is finalised to make sure it's in that presentation that you've highlighted before, Councillor Bevan.
Yeah. And the last one was
The 9 million deficit thing.
page was that, sorry.
On my packets, page 10, the bottom table on the left.
Oh, please tell me PDF. Okay, yeah.
Contribution. Deficit recovery contribution.
Yeah, again, I'll take that away to look into that for you. Yeah, I'll go away and confirm for you, and I'll give a response. Thank you.
Craig?
Yeah, thank you for the report. Could we get some context of what a qualified set of financial statements means in the pension world? I mean, certainly in the non-pensions world, it's really not good. So I'm not disputing that it's a good report, but I'd just like to understand why are we judging it a good report? What is the significance of the statements being qualified, and how does it compare to other local government pension schemes? Thank you.
Chair, can I answer this one?
Yeah, thank you.
Thank you. Right. So I think, first of all, just to confirm, so if we look into the pension fund account statement on page 4 of the report, there's a line item called profit and losses on disposal of investments and changes in market value of investments, which is approximately 159023 in the accounts. Now, members, this amount is actually a balancing figure of changes in investments from prior year to current year. Specifically, in case of Haringey Pension Fund, a disclaimer of opinion was issued by the predecessor auditor in last 3 years, which was issued in December. At that point of time, we determined that we do not have sufficient appropriate evidences over the opening balances, specifically because it was 3 years of qualification in past. Now, as a result of which, we have qualified the prior year comparatives. Now, because the current year, the figure of profit and losses on disposal of investments is a material figure as compared to the pension fund account statement, and we have not obtained sufficient appropriate evidences over the opening balances. That's why current year P&L has also been qualified. Members, I also want to confirm here that out of the, I think, other audits where we have looked into the council and the pension fund account, in almost all of those cases, the predecessor auditor was able to provide an unqualified opinion on this fund account, although it was disclaimed or qualified on the council accounts. In case of Haringey, because a qualification was issued on the fund account as well, it was difficult for us to determine the applicable sufficient appropriate evidences required to audit the 3 years backlog, given the timing and given the backstop date. As a result of which, we have reached to a conclusion that we have not obtained sufficient appropriate evidences over the prior year comparatives. The implication on current year was only on the profit and losses on disposal figure, as a result of which we are qualifying current year P&L as well. Now, there was a judgment involved, specifically whether it amounts to a disclaimer or a qualification on current year profit and loss. But having discussed it internally with our technical teams, we are of the view that the current year net asset statement, specifically the year-end statement, is free of errors, and therefore we are able to issue only a qualification from the accounts perspective, i.e. the misstatement is confined to only some of the balances and not all of the balances. And rather than issuing a disclaimer, we have decided to issue a qualification on the accounts. Is my member, do you have any further question on this one?
So thank you for that. So just to confirm, the qualification is on the opening balances. There are no reservations about the accuracy of the closing balances.
There are reservations on the closing balances, and that is on P&L. I mean the pension fund account, that is on page 4. So the current year P&L account has a figure of 159023, which is material for us, and we have issued a qualification on that amount as well.
How does that play into the funding level then? Because that's a net gain, which is very positive for the funding. So
yes,
so the funds are either there or they're not, aren't they? I mean, for the closing balance.
So the closing balances, why we were able to obtain sufficient appropriate evidence is because we did obtain direct confirmations from custodians and investments. And we were able to check the completeness and valuation of those amounts. So the funding would actually take the valuation figures at year end. So we were comfortable over the funding report on that basis. Plus our actuaries looked into the funding documents and the calculation of present value of defined benefit obligations that was prepared by the funds actuary. And we were able to obtain sufficient appropriate evidence on both the areas.
Okay, indulge me just one more time. So from a funding perspective, there are no concerns or reservations with the closing balance, but from a profit and loss perspective, there is, because you don't understand the opening position.
Yes, that's correct.
Okay.
And in the opening and in the profit and loss as well, it's specific to the line item profit and losses on disposal of investments and changes in market value of investments. Because to derive this figure, the opening balances are used actually.
And on the basis that you're commissioned to do the next year's accounts, will this qualification then stop now that you've have a starting position?
Yes, that's why we are able to, well, give a clean opinion over the year and balance sheet figures, net asset statement. And given that we will have a clear figure for next year starting, the only, I think, qualification will remain to, let's say, the comparatives related to 22-23 in next year's account. So where in the financial statements, there would be a reference to 22-23 comparatives. That would be the point of qualification. So for example, within the relevant notes in the accounts, there are some accounts within which 21-22 figures are also included. So next year, when the accounts would be prepared, they will also include 22-23 figures. Those figures will remain a qualification in next year's account. But the P&L won't be a qualification.
Okay, and last two questions, please. How frequent, how common are these qualifications amongst local governing pensions? And secondly, comparatively with other pension schemes, how severe are the findings to do with the management actions?
Thank you. So with regards to pension fund qualification, as I mentioned, that from my experience, from what I've seen in last 1 year of the audits that KPMG has performed for the backstop date, I think this was the only one where a disclaimer of opinion was issued by the predecessor auditor. And on my other audits, because we were able to obtain an unqualified opinion, plus able to perform file reviews on the audit that was done by the predecessor auditor, we were able to still issue an unmodified opinion or unqualified opinion on those accounts. So it is not a common thing, first of all, on the pension fund side. But given that there was a disclaimer on the accounts, specifically on the pension side as well for Haringey Pension Fund, we were not left with much choices in this one. We decided as a preliminary procedure, we have tested the completeness, existence, and accuracy of investments, but we were not able to obtain sufficient appropriate evidence over the valuation of those funds. Sorry, member, what was your second question?
The severity of the other management actions that you've identified?
So I think, those were mostly around the control deficiencies and audit misstatements on the current year accounts. Now, if we see the size of those misstatements, those were not material, but I do believe, we have discussed with officers our approach for next year, particularly around provision of information for journals. And that hopefully will help us resolve the, delay in providing the provision of information. Last year, I think, it was unique for Haringey because there were lots of change in accounts officer as well during the year, as a result of which the new officers who came in place were not fully aware of the operations in place. And that's why, there were lots of to's and fro's. But hopefully, we will be able to resolve it next year, given if provided it is a consistent team that we had in current year, as I think JB has given us an assurance of.
Thank you. Chair, my last point on this is based on that, I would say it's not a great report. It's challenging for us as a committee. We finally got a set of financial statements, which we've been waiting for a long time, and the reasons why are known. But the plain fact of the matter is these are qualified, and there are issues in there. And so I think care and considerations need to be put in to consider A, how we're absolutely sure that these errors are addressed, and B, there's a communication piece because members will be concerned and they have a right to, because their pension fund has a qualified set of financial statements. That would be my counsel.
Do you want to come in, Tara?
Thanks. Just a couple of points of me. So the recommendation around the journals in particular was also one that was picked out on the councillor accounts as well. So we've accepted that and we will rectify that going forward. In terms of the other recommendations, so we will track those and we will report progress back to the committee through the committee and board. We do want to introduce a business plan for 25-26, so we will pick up as part of that. So you will see Site to Avoid will very quickly be starting the audit process for 24-25. So I think both from, well, certainly from a pension fund perspective, we want to make sure that these are picked up before the audit starts, and we're getting very close to the end of the year. In terms of the, it is challenging, and I think the backstop date of the 28th of February. So we are unfortunate in that we were dealing with 3 years of unaudited accounts. So I suppose there's an appreciation from us internally, certainly from my perspective, it is probably going to take a couple of years to almost get to a position where we can, you know, assuming nothing else is raised, let's just say everything else stays the same, that we will be in a position to get a full assurance over both opening and closing balances. We're not unique in that position. There are other authorities that are in a similar position to us where they haven't had the 3 years audited accounts, but there are also lots of authorities that are up to date with their audits, and therefore, you know, we're not unique. We're not the only authority, but there are absolutely, as KPMG colleagues have said, there will be many authorities out there with an unqualified opinion as well. But just to give you that assurance that we acknowledge the recommendations and we will be taking those forward to pick those up as part of the 24-25 audit, and particularly the recommendation about the disclosures of interest, which we'll also pick up directly with colleagues around the table. Thanks.
Sorry to pick up on one point to make sure I'm not losing my hearing. I thought I heard this was the only qualified set of financial statements that our colleague at KPMG had seen recently.
From the pension funds perspective, funds perspective.
So this is not a common occurrence.
If KPMG colleagues say is the only set of accounts that they have seen, I can't really comment on that. I am aware of others that will have been in a similar position, perhaps with other audit firms.
Okay, and any further questions or comments from members? Councillor Ingram.
Just following on from a question by Craig, how worried should we all be about the conversation that we've just had? Or you saying actually it's unqualified, we're not entirely certain about the risk and we have to wait and see for another year?
So as for KPMG colleagues.
Right. Thank you, Chair. Right. I think, frankly, first of all, let me just reword what I said earlier. On the audits that I have done, myself, on the pension fund side, this was the one which was, where the disclaimer, I'm not sure about those that are outside KPMG. If there was a disclaimer of opinion on those set of accounts from the pension fund side. Now, on council side, we do have cases where a disclaimer has been issued in prior year accounts. But the anomaly for us was that the pension fund was disclaimed as well by the predecessor auditor. Now, remember, I do get your concern that, okay, how do we build an assurance going forward? I think the key point for us is that we are able to gain sufficient appropriate evidence over the current year end balances. Apart from those that are mainly impacted by a disclaimer of opinion in prior year accounts. And given that we have been able to perform those sufficient appropriate evidence, we have been able to perform that kind of audit on current year accounts with coordination with the members and coordination with officers of accounts. I believe we can look towards building a better assurance from next year. And frankly, this is a better place than what we were expecting a few months ago when we were not even provided what the opinion was to be given by the predecessor auditor. So in a way, I think, we are in a much better position than what we have seen in past. given that there were no accounts that were signed.
Yeah, and just, I mean, I think it's quite right for you, the committee, to be able to, ensure that we are reporting progress against recommendations that we are. So, it's not, nobody wants any recommendations or any kind of issues raised. So I think that's a commitment that we as officers need to give to you, that we're reporting progress, and you can see and you've got the evidence that we're dealing with those to get us back to a position where we've got that full assurance.
Any other questions or comments? Okay, thank you very much. We'll move to the recommendations as set out in page 1, paragraph 3.1 to 3.4. This item is to be noted and agreed. Agreed? Great. Moving on. Item 9 is new items of urgent business. Are there any items of urgent business? No. Moving on to item 10, dates for future meetings. This is down as 20th of March. Moving on to item 11 is exclusion of press and public. And is likely to be subject to a motion to exclude the press and public from the meeting as they contain exempt information as defined in section 100A of the Local Government Act 1972. Item 12